You guys look like you're about to fall asleep. So we have a challenge to actually give you a bit of insights to keep you guys awake. So my name is Divine. As our MC has said, I am a fractional CMO. I know I've had to explain what a fractional CMO is in the last couple of days. So essentially, I just work with businesses to help them and help them define their strategy. Spend a lot of time in the last 10 years working in the technology and fintech space. So now they call me a gun for hire. So if leaders and CEOs are looking for someone to help them define their marketing strategy and their execution, I am the person for the job. So first, thanks, Didi. Thank you so much. You set up the stage for the conversation, so this is perfect. We are going to talk about what it actually means to build a business using, when you look at payments and lending, what's the role of growing businesses? What's the role of actually accelerating growth? So just for the sake of the panelists, let me see who we have in the room. How many of you guys are running a business? What are the other guys doing? What do you guys do? Because I only see like 4 hands. So this conversation might be relevant for the 4 hands in the room. Let me look again. How many of you guys are running a business? Much better. How many of you guys have ever taken a loan to run a business? Mumbi and John, you guys are in good hands here. How many of you guys are either running a payments business or a payments ecosystem, or you've integrated with payments in the last year? Perfect. Cool. So I'll want the panelists, you introduce yourselves, introduce where you work, but more importantly, what are you doing with businesses today? We'll start with Caroline.
Hello, everybody. My name is Caroline Hanaveyman. I'm head of product at Paystack and country director for Kenya. So Paystack is a digital payments platform. We make it really easy for African businesses to take payments from all over the country, a continent, and all over the world. We started 8 years ago in Nigeria. Now we're in seven countries across the continent. We were bought by Stripe 3 years ago to help accelerate our mission. And to help them kind of move and expand into Africa. But we're operating autonomously today. So excited to be on this panel.
Peter?
Hey, everyone. My name is Peter. I'm Vice President of M&A at MoneyPoint. So at MoneyPoint, we've been around for, I believe, since 2015. And we're essentially a payments platform, principally serving merchants, businesses, and now have since expanded to serve the full suites, including consumers.
Hello, everyone. Happy to see everyone here. I can see quite a number of familiar faces, which is great. My name is Mumbi. I'm the country manager of Tala in Kenya. For those who've not interacted or know about Tala, we're the market pioneer in digital credit. So as you see digital credit across Africa, it did start with Tala in Kenya. Currently, we are operational in a couple of markets. So Kenya, Philippines, Mexico, and India. And so far, we have about 8 million customers globally and disburse about $1.2 billion annually. Looking closer at Kenya, we have about 3.5 million customers. And our focus is always on how do we actually democratize access to financial services. So we have started with credit, but our big vision is ensuring that all financial services are easily accessible, and especially for people who've been left out of formal financial ecosystems. Thank you.
Hi, guys. Hi, good morning. My name is John Egu. I'm currently the Chief Operating Officer for AutoCheck Financial Services. At AutoCheck, we are building the infrastructure to make car ownership in Africa accessible, convenient, and maybe affordable, right? AutoCheck is operational in 9 markets in Africa. We've been at this for 3 years, 6 acquisitions. So I do think we cover 70% of Africa's GDP, and we are looking to ensure that every one of you gets into a car. And I'm quite delighted to chat with everyone on this panel here.
Thanks, everyone. So let's kick off with trends. So when it comes to, especially when you're looking at businesses, the business side of things, what are the trends that you're seeing in Africa particularly? Can have everyone answer.
Okay, great, I can start. So it's interesting, I think, speaking to a lot of folks from North America, from Europe, like if you look at Stripe, it's primarily a cards company, right? But you come here and it's like every single market you operate in, there are at least, 3, 5 to 10 different forms of payments that exist in every market. And the complexity of that in terms of not only collecting money, but then also reversing money when you're trying to refund for fraud, for disputes, is really complex. And the rails of payments are still being built. And that's really because we're needing to meet the customers where they are and where they trust their digital money to be. I think happy to have gone after Didi's presentation, which was very much focused on trust. Somebody who is taking using MTN for their mobile, it's very natural for them to feel like they would trust having their money with MTN more so than going to a bank, opening a bank account, and having a card tied to that money. And so you have basically a fragmented set of rails that's being built across the continent in order to reach end consumers and onboarding them into a digital economy. And then you're seeing this emerging kind of ecosystem of payments aggregators or kind of cross-border fintechs in order to unify this fragmentation of rails across the continent. And it's been so exciting just to see the last few days. You walk around, you look at the booths of fintechs, like it's all cross-border payments. It's all thinking about how do you unify that experience for each of the businesses to be able to access more consumers and to expand their market. And like a lot of the conversations around expansion, one market, one subset of customers on the continent isn't enough. And so you need to access kind of all of those consumers across a very fragmented ecosystem. And it's been really exciting to see how many players are just looking to unify and connect the dots between these rails.
Peter?
I think she covered most of it. I was going to say interoperability, essentially kind of connecting all of these disparate payment methods as they kind of across like the various markets. So, for example, right, in Kenya, with us being kind of a mobile money-led market and M-Pesa being incredibly prevalent, how can you kind of put all of these things together such that, for example, a business operating across, let's say, Kenya and Nigeria can still kind of, for example, handle payments and even, for example, start to kind of do very interesting things like, intercompany lending and whatnot. Yep.
Yeah, on a different note, looking more on the credit side, I like to tell the story of credit because sometimes when we're in this conferences talking about tech, we talk about where we are. But let's take a step back and think about the last 10 years. Before 2014, this was true in a lot of African markets. If you didn't have a bank account, essentially you didn't have access to formal credit, the keyword being formal credit. So a lot of borrowing was happening with family and friends. The most popular lender was actually the shopkeeper, similar to what Didi was talking about. So if you think about trends, I like to start from a place of there's been a phase one of the lending industry, which is what has happened since 2014 to date. And this was mostly focused on how do we actually just open up access to credit. Anyone who has a mobile phone device, doesn't have to be a smartphone, but if you have a mobile phone device, how do you actually start to access credit? And I know we'll talk about this later on, but the power there was actually leveraging alternative sources of data to actually underwrite. Then now I think of it, when I talk about trends, I like to think of it as, okay, what's the next phase of the industry? What's happening over the next 10 years? And in my mind, I would say, and saying this very carefully, but access is technically mostly solved for. Because let me give you an example of Kenya. There's 300 plus digital credit providers. So when you start to look at markets that are deeply saturated, then what exactly is the opportunity moving forward? And how I usually summarize it is, it's just about the customer. So how do you actually make this product work for the customer and increase convenience, increase the points of access of credit, and even more importantly, how do you actually make this credit even more affordable? And when you talk about the cost of credit, then a new question comes up of who's paying for the credit. And we've seen some very interesting models coming across the continent where you see 0% credit, interest-free credit, and you find the cost being passed on to merchants and billers. So there's quite a lot that's happening. Last but not least, but I know we'll talk about this later, is I always like to talk about the power of ML and data. That is essentially what runs any credit infrastructure, because you're talking about people who are not going to present stacks of paper so that you can give unsecured credit. So how do you actually underwrite people and give a decision within 2 minutes? And that becomes the true power and the true trends we'll continue to see.
Yeah, so adding on what Mobi has spoken about, so if you look at the ecosystem, maybe if I narrow down to automotive, motorization rate in Africa is quite nascent, right? Out of 1,000 persons, only 44 guys own cars. So we do have the transportation poverty. And looking at that, players in that ecosystem, people like Tala, people like AutoCheck, what we see is there's a lot of personalization. Maybe Didi called it trust, right? You're seeing credit look at the person better as against a one-size-fits-all. And then you also see embedded financing where you can sell multiple service with one transaction, right? So that is also happening within the ecosystem. And I also see a big push for automated underwriting. At AutoCheck, I think we kind of prided ourselves in saying you can get an offer while your coffee is still hot and you're in the dealership. So you can imagine that experience. You're seeing the car you like and you're trying to make a credit decision or trying to make a purchase decision. The underwriting is fully automated and you have an offer to make your considerations. So that for me would be recent trends happening within the credit or maybe lending ecosystem. Thanks.
Thanks, guys. So I'll go with John and Mumbi first, because you touched on something that I think it's one of the biggest challenges we see when it comes to especially lending, right? So the figures we know, 90% of our businesses are SMEs, right, in Africa and across Africa. So some markets are doing better than others, but roughly we're looking at an SME market of 90% across Africa. But one of the biggest challenges when it comes to growth is that most businesses need a loan or they need financing, but most of them don't meet that mark of credit worthiness, right? So you find that most businesses either don't know what it means or what it takes for them to get a loan, or even the institutions are struggling to figure out how do you actually score a business. So I'm curious, for businesses that need lending, they need loans to grow their businesses, what measures have you taken, especially when traditional modes of scoring are not available or don't actually exist, like there's no formal network or framework for scoring? What measures do you take to ensure that the businesses that need lending or they need the loans actually get them? So Mumbi and John, whoever wants to go first.
Sure, ladies first. I think it's always a very interesting question whenever we talk about credit access for businesses. There's one of the numbers I saw last year that was really staggering. So just focus on Kenya. I'm not sure what the Africa number is, but the deficit for credit in Kenya is about $2 billion. And that for me gave me a really clear picture that there's still a lot of work that is there to be done, even in a market that looks largely developed. So let's take a circle back to Tala. I'll share some numbers. Today, 70%, it's been consistent over the last 3 years, about 70% of our lending goes to businesses. However, the most interesting thing is we don't underwrite people as businesses. So we underwrite you as an individual. So this is one of the things that we had to really start to sit and try to understand. And if you look at the true picture of an MSME, they're a sole proprietor. They do not have a license. They're not paying tax. It's probably one or two people. They're operating off of their mobile money wallet. So you essentially have to underwrite that individual almost on their personal income, but they're actually using the money for a business. And it's worked relatively well for us so far. However, the other thing, just to talk about alternative data sources, we're more than just a fintech in how we think about ourselves. Internally, we actually call ourselves a tech and data science company, because what we manage to do is two-part. One is, how do you actually get a better sense of a customer's cash flow that gives you enough confidence to be able to give them a loan? But even more importantly is, how do you start to model out behavioral and psychometric factors? So let me give you guys a really good example. One of the most interesting findings we had over 6-7 years ago is that people who have stronger social connections tend to be better repairs. And if you think about it in an African sense, if you walk into a market today, actually I did this last year, they'll clearly tell you, oh, you can give this person a loan, but this person doesn't normally pay. And they know it very clearly. So the power of tech is in being able to take those trends that are happening naturally in our ecosystems and then model that, create models, ML models, that replicate that behavior. And essentially, if you do that, then you start to see much better, performance on your loans. I think those, something that I think Didi also mentioned on social proof, which is really important. Referral networks become really powerful, especially when you're building a credit product, because your best customers will show you where all the other really good customers are. So in our sense, it's more of, think of underwriting, especially when you're thinking about alternative sources of data, beyond just what you can see around cash flows, because today we're able to access a lot of that through mobile money. However, think more about the behavioral aspect as well, to sort of empower how you model out.
Thanks, Movie. From my perspective, I think I would look at multiple segments of this problem, right? Because we can say that the fundamental problem is there's very slow evolution of what you call traditional credit scoring, right? The banks who are supposed to be leading this are not doing a very spectacular job with that. And you map that with the demographic, or let's say the population sizing. Like, Africa is poised to have like very sizable adult population in the next 5-10 years. Now, most of those guys run their businesses, and this is who we are speaking about. Moby gave the numbers, 70% of businesses are SMEs. Now, the thing is, alternate data exists, but do we really have acceptance of what alternate data is? Like, who is taking your mobile your mobile records as valid data for credit scoring? So it does exist. I've interacted with multiple models. So we need to have that conversation around, yeah, the data is there, but who is accepting it, or who is taking that in? And then also the context of, do SMEs understand the real impact of credit scoring, right? What does it mean to not have a good credit score? Because that's what the ecosystem kind of needs. And that's why businesses who are lending start to become defensive or offensive, as the case might be, right? So as members of the populace, we need to all join hands in educating, because there's a big financial literacy conversation here, right? People don't really know what it means to take a loan and not pay back. Yeah, we do have the social context of lending, right, where friends and family say, don't give him or her loan, but we also need to evolve from there and get into saner climes where it affects everything I do. My ability to get into school, my ability to buy the next mobile phone, my ability to get into my dream vehicle. And that's how SMEs can better position themselves to be supported by businesses like mine and Tala. We are quite bullish about that segment of the business, because that's really what drives the growth Africa truly deserves, like in terms of economic empowerment, in terms of job creation. These are the guys really powering the ecosystem. So we also need that part of the divide to do what needs to be done. And maybe in our conversations, maybe we can also speak about what we are doing to educate SMEs and the populace as well. Thanks.
Okay. So let's lean a bit on on that conversation, we're talking about payments, right? We're talking about alternative sources of data. And I see payments. We talk about a lot, payments being the backbone of lending, right? So for Caroline and Peter, curious to hear about when it comes to making sure digital payments are trusted and that we are creating a sense of integrity around payments. What are you guys doing, or what measures either we're taking today or we need to take to ensure in the African context that we are ensuring that there's cybersecurity, there's fraud prevention? What measures are we taking to make sure that even when we're giving a loan, when you're using collection, you talk about collection, and is it when you give a loan, you use payments? When you're collecting, you use payments. So what measures are you ensuring that these guys who are giving loans are secure, the payments are secure, that you are also ensuring that even the end users are trusting that when they make a payment, it will actually get to the person?
Yeah. This is very top of mind. In order to preserve an ecosystem of trust, ensuring that you have the right controls against cybersecurity, fraud on a merchant level, fraud on a consumer level. Thinking about money laundering is also a huge thing. And it's, if you look at most kind of the off-the-shelf solutions as well that exist, they're based on models that are not trained with data from African businesses and African consumers. Fraud is very specific to kind of social behaviors and social engineering, based on whether or not you're doing a payment via mobile money, via cards, via bank transfer. And so I think what's imperative is to build models that are trained off of local data, and then also thinking about how we as an ecosystem can share data in a secure way that could benefit us all. And then also making sure that, not so dissimilar to underwriting capabilities, thinking through what are other kind of innovative ways to ensure that we're assessing risk at any one point. I think that there's also while you want to be careful, you also don't want to lock out honest businesses and honest transactions. And that's actually almost a thing that happens more. I would say if you start applying some of the controls that, or you start inheriting controls that you see elsewhere and you apply it to businesses here, you lock out people that are actually trying to do honest business. So it's coming up with kind of the risk assessments that balances, potential fraud, and breach of integrity with folks to be able to actually do payments.
Yeah. I'm happy to speak about it from a MoneyPoint perspective. I think at MoneyPoint we have a more nuanced view on it, just given that our platform is such that we do payments and lending. So I think if I think about kind of our journey to lending, it's kind of been built on top of the backbone of payments infrastructure. And when I say payments infrastructure, that isn't necessarily just payouts per se, but infrastructure in our context spans payment gateways, and also to what I would kind of really highlight as kind of a broad scale offline distribution network, where, for example, right, credit decisions is in part a data analysis based on what we've seen across payments for a given merchant or business across the ecosystem. And in addition, also to being able to kind of also bring some of those subjective elements based on, for example, a business relationship manager, for example, out in the field, having a very strong contextual understanding of the business. And I think kind of through some of those things, we're able to kind of really find a mix that works and is optimal for the business.
Okay. All right. So I know the time is saying that we have 5 minutes, so I want to jump into something that is very important, which is we talk about it, but we talk about it, in Kenya they say we're talking about it chini ya maji, but the role of partnerships, right? There's a handshake between payments and lending, and if you look at the fintech ecosystem, we technically should be very dependent on each other, but the reality is we're not. So I'll go to Mumbi and John, and then I'll go to the question for each of one of you. So for Caroline, and Mumbi talk about what it means to partner with traditional institutions, so whether it's banks, whether it's momos. What is the role of that partnership between the two entities? And then for Peter and John, let's talk about how do we enhance these partnerships, particularly between payments and lending?
I think for us, Paystack, we're a payments aggregator, so we're nothing without our partners, right? We're an ecosystem player, and we're connecting the dots between other institutions. So I think that's part and parcel. I think a big the role that we play is, businesses need to be able to manage their cash efficiently, and they need cash to grow. And as a payments company, we are helping execute against the business promises and to be able to also manage cash. I think, ensuring that cash inflows and cash outflows are efficient, but also in the kind of the short term, easing the cyclical nature and some of the gaps of those inflows and those outflows. So by nature of the payments industry, where you're basically doing data exchange and then you're clearing and moving cash, there's a lag, right, between when you've said that you've collected money and when you receive money. And so really helping businesses with kind of providing that level of float or that liquidity that smooths over any kind of cash imbalances on a daily or a weekly basis. And then being able to create, as a payments provider, we now have a unified view of your financial health and that record keeping. And that's where that, partnership with lending is really, really important to be able to, offer that type of record that can then be used for underwriting and risk assessment. To be able to infuse the business with cash that's needed to grow, whether for working capital or for investing to grow new product lines.
Okay.
Thanks. I'll try to be very disciplined and stick to the non-traditional part. If you think about the relationship between, let me just call it generally fintechs and non-traditional, or rather traditional players such as banks, in my mind, it always comes down to a few things. One, a lot of African companies are experiencing the challenges of devaluation. It is a pain point for everyone. If you think about lending, it isn't the power. The power is actually in being able to get your debt in local currency. So that's a very clear pain point that we're seeing a lot of companies starting to really understand the importance of building relationships with local banks who tend to actually have the capital that can go forward for onward lending. However, if I look at fintechs more generally, so let's break it down. It's always a question of what power do the traditional players have and what powers do fintechs have. If you look at a traditional player like a bank, they have very clear regulatory systems and probably all the licenses they need. They have really good compliance teams. They can handle a lot of that compliance overhead. And number three, they do have capital. Then on the fintech side, fintechs are very agile, very connected to the customer, understand the type of products and problems they should be solving for, and are able to take things to market pretty fast just by virtue of their tech expertise. So for us, what we've learned is partnerships is actually the core of how you actually grow. We're a 10-year-old company, and even as we continue to grow, partnerships is right at the center of how we want to move forward, whether it's partnerships with fintechs or partnerships with traditional institutions. And it's a question of how do you bring in your superpowers and always remove the layer of competition from the mix and just kind of focus more on trust around what's your expertise that you're bringing to the table and what's the expertise that the fintech is bringing to the table. And through this, we've seen some amazing products come to market, whether it's on the lending side. We've seen quite a number of digital banks start to crop up across the continent just by virtue of being able to bring the two superpowers of what banks offer and what fintechs can actually bring to the table as well.
Okay. Peter and John?
So I don't think we can belabor that point so much. There has to be that collaboration, that handshake between the traditional lenders and fintechs. Mumbi took words out of my mouth. we have to look at how we complement each other, like the sheer speed, the innovation from the fintech and the capital and that regulatory governance structure within the bank just positions Africa for a better stage when we have these conversations here.
Yeah, I tend to agree with that, and I think much in the same way we think about it at MoneyPoint is how can we better facilitate, for example, collections on loans for our various partners. Just also to bring it into scope, like some of the visibility we have, for example, at the last mile, because I think the key thing, especially in lending, is that lending initially is relatively easy to do. Collecting is incredibly difficult. And I think, having a trusted partner with kind of broad scale visibility across, omni-channel, both online, offline, helps really drive strong outcomes around just kind of loan portfolio performance as it relates to non-performing loans and the like.
Okay, thanks. So as we're closing down, there's one of the other big topic we talk about is that as much as we have incumbents, so you guys have been here for quite a bit, but we have a lot of emerging fintechs, a lot of emerging payment lending institutions that are coming up. I'm curious to hear your thoughts. Are they going to make it better in the sense of when it comes to offering services to our businesses? Are they going to make it better? Are they going to make it easier? Or are they adding complexity? So this competition, these young guys are coming in. Are they helping or are they adding complexity to you guys?
I mean,
pressure, guys.
I can take a stab at it. I think inherently, as more and more people kind of step into the space and lend, I think that's a net good for the ecosystem at large. I think one of the things I spend a lot of time thinking about is how can we start to kind of unify some of these experiences across the board. So when you think about, for example, person A took a loan from this platform, and the same person took a loan from this other platform, starting to try and build almost kind of like a 360 view of what creditworthiness looks like across a variety of mediums.
Okay.
Yeah,
Caroline?
I can contribute to that because I really like what Peter said. In my mind, so Devin, how I think about it is even 10 years ago, we were the new guys who came into the market, right?
Yeah.
I as a techie at heart, I always believe that having new players always changes the game. And in my mind, when I look at lending, it's gotten to a place where it can get almost very complacent. It's just about dishing money. But I think new players are bringing in new ways of thinking about credit. There's a company in Kenya, for example, called Faraja that recently launched. And for them, it's almost what internally we call it use case lending. It's not just about giving you money, but giving you money for very specific purposes.
Yeah.
It does make a huge difference because it starts to address some of the challenges we've had around over-indebtedness and so on and so forth. So in my mind, I think competition is amazing. It always forces ecosystems to grow faster. And to what Peter was saying, that's something that's been done largely in markets such as the US. We've seen players such as Capital One, Discovery come together and collaborate to actually address issues such as fraud and form consortiums. So in my mind, it's the more the merrier, and we all actually come together and address some of the challenges in the market.
Sorry, so what I'm hearing is that we bring more, but collaboration.
Yeah. I would absolutely agree. I'm also an eternal optimist, but I would say I think there's going to be more complexity. There's more, new use cases as well. But I do think that everyone that's in this space is trying to make it better. And I would say on both the technology side and on the business partnership side, right? So I think financial institutions were some of the first to digitize, and there's a lot of kind of very old school technology and systems that are powering those institutions today. And I think there's a lot that needs to be done in terms of standardizing systems, standardizing APIs so that we actually can play together. And I think the new kind of tech companies are creating that standard and a new ways of thinking, and sometimes even coming in and building for those institutions. And then you also, you have to want to play with others to make those systems interoperable. And if you have a monopoly, you're not necessarily as likely to want to do that. But I do think that over time, given how fragmented the space is, playing together is the only way that we're going to be able to go far.
And John, any?
Yes, well, I agree. There's a complexity, but then we must always think about how interoperability plays in this grand scheme of things. At AutoCheck, we ensure we do work with the best service provider. We don't have to reinvent the wheel, and that's really what the ecosystem should really be about. So more players come in, but we should always collaborate.
Okay. Thanks, guys. So we can't leave the stage without painting the future, right? So it's the common question I ask everybody. So more businesses are going to be built. We are looking at young entrepreneurs. And I think where we are in Africa, they say that we're going to see more businesses, almost like 100% growth year on year when it comes to businesses. And therefore, we need to almost shape up from an ecosystem perspective. So what do you see, either what you see or what you wish to see in the future when it comes to payments, lending, serving businesses? What do you see? If you're for Caroline, you are optimist. So if you could,
so I think if you draw out the map of different players that's involved in like moving money, it's just insanely. There's so many middlemen. I think that we're gonna find ways to remove a lot of handshakes between different players and make them irrelevant over time, given some of the technological kind of advances. And over time, I think regulation is also going to open up to kind of blockchain technology. So I think a lot of the middlemen is going to be taken out. I think there's going to be more simplicity in terms of data exchange and money movement. And then I would also say, I would love for us to find a way to better map, the supply and demand of African currencies so that the US dollar doesn't have to sit in the middle of all exchanges. I think it's going to make a huge difference for driving down the cost for doing cross-border payments within the continent.
Peter?
I'm happy to tack on it a bit. I think we still have some ways to go around open banking. So one, I think a lot about kind of, for example, okay, someone might have built like a very significant relationship, for example, on like MoneyPoint. They use payments, they use lending and whatnot. Almost kind of get into a place where you can kind of start to do things like permissioned data access, where all of your financial profile is kind of housed within this platform, and without necessarily having to like go and re-enter it as you're looking to do a number of different things. So I think that's one. I think another element too just continues to be continuous innovations just around payments in general. So I think when you can start to kind of get to this very interesting place around even things like, for example, like direct debit, setting kind of mandates, it increases your level of flexibility you can start to introduce with respect to like loan products. And I think the other thing too is just from KYC verification, I think we can kind of start to get to a place where that gets much more robust in terms of being able to, again, share common information that we have on a specific lender, where it's also too insightful for others that are looking to lend across the ecosystem.
Yeah, I actually think quite a number of the points have been mentioned. So I think of it in three ways. One is how do we continuously lower risk and when you're actually offering credit. And one of the things Peter's mentioned is actually KYC. One of the things I'm constantly learning is Kenya is actually one of the better markets with regards to KYC. As you start to move further out, there are huge challenges in people actually having IDs, people having multiple IDs. And so on and so forth. So how companies that are actually solving for that problem, they like to Smile ID and the rest. I think that's one of the things I continuously really look forward to. And just on the risk point, a B on that is actually how do we have a credit score for businesses? It doesn't have to be formalized because a lot of MSMEs are actually not formalized. However, we've seen quite a number of companies that are aggregating data for small businesses. think a company that's able to actually aggregate data on sales history, that becomes really powerful for you as a credit provider because you get a much better picture of what are the cash flows, and especially in markets where cash is still king. So how are we able to actually aggregate the right types of data to continue underwriting MSMEs? The second point for me is, we've talked about traditional institutions and any other players within local markets, but access to capital in local currency does actually open up, quite a lot of lending. A lot of businesses actually don't lend off of their own balance sheet and essentially rely more on debt capital. So how do we open up debt capital that doesn't introduce additional challenges? Then last but not least, because we have our payment friends here, I keep saying payments is the backbone of credit. So how do we actually still keep pushing towards interoperability? How do we ensure we kill a lot of the fragmentation that exists there through collaboration? I think for me, if those three things become true, then it will completely open up how the credit ecosystem is set up.
Last but not least.
Yeah, I think rounding up, I see AI making more inroads into underwriting, getting more personalized and getting more intelligent. And I also think that from the concept of data or alternate data usage, I do think that companies who invest in learning more about what the data is saying, as against intuitive business making, that's what I call it, would lead the pack. And yeah, that's my view.
Okay. Thanks, everyone. So I'll summarize. I'll try my best to summarize. What I've heard is we need to continually build trust. We need to continually educate our users. We need to partner more across both traditional and fintechs. And more players in the fintech means that we have better solutions for our businesses. So we need more people to continue building. Thank you, guys. It's been a pleasure. Thanks, everyone.